Hello traders, the title of the video is KinRoss Gold Stock Common Sense Elliott Wave Analysis. Alright, I have been asked by a YouTuber of the name Brian Smith, who did ask me to review KinRoss Gold stock using the Elliott Wave principle. What I'm about to do today is what I like to call a common sense Elliott Wave analysis. All right, let's get started. All right, so I'd like to thank Brian for asking an essential question. I like it when traders ask me to review specific stock, especially now you have this is an American stock because I'm using TC2000. I have a data for this stock right here, which is good. All right. So before I forget, all right, this is very important. Before I forget, KinRoss, I will say to trader the pink line here, $3.59. Priority to bullish signal above $3.59 and priority to bearish signal below $3.59. Now, if it's going down below that level and it reaches the level of $3.01, understand that $3.01 is another important support level. All right. So if it goes below $3.59, it may consolidate between $3.59 and the $3.01. All right. Those are two key levels. If you are interested in this stock, if you have done your fundamental analysis and you know what they are up to, all right, you want to, all right, note down those two key levels. It has something to do with my own proprietary trading tool. All right. That's it. All right. It's there. So what can we say talking about Elliott Wave? Now, the reason why I'm using the word common sense Elliott Wave analysis is that I'm not going to go into a normal Elliott Wave count. I'm just going to say this is a trending phase. Anyone disagree? All right. So from the viewpoint of a normal chart pattern trader, from the viewpoint of a normal technical trader, even from the viewpoint of many Elliott Wave traders, many traders will agree that this is a trending phase. Okay, from here all the way to the top there, right there. Okay, and then we have a total retracement. So the correction has cancelled the trend completely. So an event like that, when you see a stock that it has cancelled a trend, you want to find out why no one tried to buy it when it pulled back to the sweet spot zone between the 50 and the 61.8% Fibonacci retracement of the prior trend. You want to find out why no one bothered to buy it at the 78.6% Fibonacci retracement level or 88.6% Fibonacci retracement level. So for this stock, it is compulsory for a technical trader to do what we call a due diligence, at least perform what we call the Google Assist test. Check what's going on with KinRoss, compare the short-term assets, to the current liability. Has it passed that test? All right. Will that company remain in business? Talking about short-term to medium-term. What's going on? Don't just use technical analysis. So this is a phenomenon, total cancellation of a prior trend. All right, so you must investigate why. Okay, now a lot of traders again talking about common sense Elliott Wave analysis. Some traders may say, George, this is another trending phase. Normal chart pattern will say that, technical trader will say that, but Elliott Wave traders may say, George, can we call this X wave? All right, so they may say there was a trending phase, and then we have a total retracement. And now this one is a trending fail who could not go above the 138.2% Fibonacci extension level of the prior trend. So the Elliott Wave trader, though they may call this as a trend, they may say it's a trending fail that has failed because it has not exceeded the 138.2% Fibonacci retracement, Fibonacci correction, Fibonacci extension, all right, Fibonacci extension of this prior trend. So this is about this one. So then we have again a correction here. So anytime we use the word correction, or corrective wave, we must ask the next question, what is it correcting? So this corrective move down has corrected this 25. This corrective wave looks like a flat correction. 1, 2, 3, blah, 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 and then shoot down, and it cancel again. So it looks to me like a flat correction here. So now we're going to diverge a little bit from the normal chart pattern trader, from the normal technical traders. So some Elliott wave traders, it's normal for an Elliott wave trader to say, George, it looks to me that we have a trending phase, then now we have what we call a WSY wave with a big question mark on it, or a big question mark on it. I will explain to you why I'm using the word big question mark on it. So we may call this one, all right, if you agree, all right. I haven't finished yet. Right? Don't smash your computer yet, okay? Because I know what's going through the mind of some Elliott wave traders. So don't smash your computer yet. WSY wave. They say, George, what are you talking about? All right. All right. Stay with me, please. All right. So they may say trending phase, W, corrective phase, X, trending phase that has failed, and Y, and now they will say, George, there is a high chance that after the Y we may have an impulse move or another X wave. So the next move, if you do not have a consolidation, horizontal consolidation, at one point, if there is a breakout, we may see another impulse wave because of the Y wave. So for somebody who want to buy, now this is another thing I don't want to forget, apart from those two key levels, this stock, if it has passed, repeat, if it has passed the Google Asset test, if it is fundamentally valuable, this is a good, that will be, I'm choosing my word, if it has passed the Google Asset test, if it is fundamentally valuable, it will be a good candidate for buy and hold. All right, buy and hold, minimum 3 years, and see what will happen. All right. So this is it. This is a very, very important point for those who want to buy and hold. That's why I'm using the word, the common sense Elliott wave analysis. All right. Now, another reason why. Are you still there? Good. Now, another reason why I say to you that we will say a WSY wave with a question mark on it is because, again, going back to the normal chart pattern traders or a normal technical trader, they may say, George, I don't care about Elliott wave. I don't care about your mambo jumbo of Elliott wave analysis. I will use a common sense. Don't make it too fancy, George. It's just a pure consolidation. Are you getting it now? So roughly, all right, those normal technical traders may say people are selling in a zone of $27.15. So I don't want to put it all the way to the top there. I would like to put it roughly here, somewhere here. That's a good place. All right. So that normal technical trader may say, Joe, people are selling it at $27.15, and roughly, I won't put it down again and draw another line below the orange line and the level of $3. So between $27 and $3, the price is consolidating, and the median line is somewhere roughly at $14.70. So draw those lines on your chart, Brian, okay? And understand that there are traders out there looking at it from the viewpoint of a normal chart pattern trader, talking about a consolidation pattern, a very wide consolidation. So when we have a very wide consolidation, we can draw the median line of this half here, you see. You can divide it again, but I'm not going to mention those key levels. Just be aware of the median line of those one here, okay? All right? Okay, so what I'm going to do, hold on please. So are you getting it now? So we have a trending phase. From the viewpoint of an Elliott wave trader, it looks to me that we have, okay, a gigantic WSY wave with a question mark on it. Okay, he also have looking it from the viewpoint of a normal chart pattern. It looks like we have a gigantic consolidation in front of us. All right. So as I said to you before, priority to bullish signal, okay, above the level of a $3.59, okay. If it D below that level, understand that there is another support at $3 level, which is the base of the consolidation. The median line of the consolidation is $14.70. At the top of the consolidation, $27.15. Each half, okay, of that consolidation has a media line. All right, so those key level, why am I mentioning them? Because it allows us to control the trade and to manage our trade. Suppose you have a 2 or 3 position open, you may decide, okay, to take some profit as the price hit a specific level. So for instance, somebody who bought it at $4 level, he hit $8 level. All right, you have a 300 share, all right, you may decide to sell half of it. So at least you recoup the money that you have invested in it and maybe let the rest run or manage it carefully. And hopefully one day you may reach 14, even 20, and so on. So those key levels will allow you to manage it. Before I wrap it up, all right, wrap it up. You see, John, you are using that word too much. Yes, it's a very nice word on YouTube for YouTube creators. You want to wrap it up, yes or no? So there is a gigantic pitchfork tool that you can place on your chart. Why? Because the pitchfork tool allows us, okay, to determine the possible path that the price is taking. So, Brian, where it is now, when it starts going down, apart from the $8.85, which is the median line of the lower half of that gigantic consolidation, be aware of the edge of this pitchfork tool. You may find a resistance there and maybe pull back before going inside it. So, this stock, technically speaking, I'm using the word technically because it is important for this stock that one is also doing fundamental analysis. Go to Google for now, check everything that you need to check. If you are not familiar with what I call Google Assist test, then you too search the phrase Google Assist videos by George Trio. You see me speaking in my beautiful Texas accent. So, George, you live in London, you speak in Texas? Yes, I speak English in Texas accent. That's my opinion. I know you disagree, but that's my opinion, okay? Okay, now, so if you go, this stock, okay, the strength or the bullish momentum, okay, will be more reliable if it goes back inside the pitchfork tool. Now, I'm dividing again the lower half of the pitchfork tool. And the intersection of any part here, this is a horizontal zone. So we are now at a horizontal zone. The level of $3.59 is a horizontal zone because of the intersection between the pink line and the pitchfork tool. This is also a zone. We can draw as many lines through a horizontal zone. I don't want to dwell on it. So intersection point, a horizontal zone, and we can draw many trend lines through a pitchfork tool. So place this pitchfork tool on your chart. It will allow you to determine the strength or the momentum and whether it's becoming a little bit better, a bullish stroke or not. All right. Apart from that gigantic pitchfork tool, there is another one that you can place on your chart. That one that I'm going to draw now is not urgent right now. You do not have to do it now, but just be aware of it. Can we do that? Okay, good. So is this, you put it here, same point like the first one, but you're going to use, okay, that one, you see, a very long one down. I'm on a monthly chart, by the way. Okay, and the epic for KinRoss stock, a lot of traders say, Joe, you didn't say the epic. The epic is KGC, okay, belonging to the basic material sector, gold, all right, basic material sector, gold. So you place it here, this point here, and you see this one with a long tail, you place another one here, and you put the third one exactly where we did put this one here. Now you have another pitchfork tool that you do not have to draw today, but you may have to draw it in the near future if the price is approaching that zone. That pitchfork tool will be useful to us when the price starts going faster near the target of $27. All right. Very, very, very important. All right, so I'm leaving it there, right there like that. Okay. So all in all, it's a trending. So one thing we can say about this, not talking about the characteristic of KinRoss Gold Corporated, is that it's a stock that will go up, it's consolidating with a wide range. It will go up and it will cancel it completely. It's having what we call a total return, a total cancellation of the prior trend. So we can say that this correction has cancelled the prior impulse wave. So if we talk about a higher degree wave count in this case, we will start again here. So suppose you are somebody who understands a higher degree wave count, you call this a first wave of a higher degree. Okay, so you say that is a first wave of a higher degree, and then you will say, all right, Joe, this is the second wave of the higher degree. But now we have an Elliott wave violation. Why? Because the second wave should not cancel the first wave. So if the second wave has canceled the first wave, what do? We start counting the wave again. So we will now call this one the first wave. So now we will now we start counting again. So this will become again. What am I doing here? Okay, stay with me, please. And now we call this one now the first wave of a higher degree. Wow, okay. I may have to pause the video. Are you getting it now? Because if we call this one the first wave of a higher degree, the second wave has cancelled it, we might start counting. So this will be the new first wave because this one has been cancelled. So we will remove those 1 and 2, and now this will become first wave. And again, we will call this one here second wave of a higher degree. And again, we have an Elliott wave violation. And now we will now, as I'm telling you now, Brian, so we are now expecting a new first wave of a higher degree because both first wave has been cancelled. There was an Elliott wave violation. So we are expecting a new first wave. That's why I'm saying using the word common sense Elliott wave analysis, because in fact it's a consolidation that is taking place all over the place. So the wave has cancelled it. That's why I said to you WXY wave with a big question mark on it. Why? Because we have a violation of Elliott wave principle. All right, all in all, that's what I can say to you, Brian. Excellent stock. I like it. And I hope you allow traders to see exactly what they need to do if they are counting wave by themselves. All right. If you have any more questions, Brian, yes, put in the comment section. And of course, I'll be back again recording another tutorial. As I say to traders, I read all the comments and I take note. Like you see, trader did ask me about Bitcoin. Another one did ask me of copper. And now, Brian is asking me of KGC. Sometime if I note it down and I'm not coming back to it after 1 or 2 months, well, please feel free to remind me again and say, John, have you forgotten me? Okay, please go back to that stock. So okay, all together like a friend. Okay, we may look at it again and do something. Another thing before we wrap it up, very important point, this stock is cancelling the impulse wave. Even here, look at this one. It went up there, it canceled. It went up there, it canceled. So now if one day this stock goes up all the way here, what will be going through our mind? We will say that probably this is a good candidate for bearish trade. It has a high chance to cancel it again. So the bearish trader will love this stock and the bullish trader also will love it. And everybody's making money. You see how they are taking profit at the midpoint. And so this is what I'm talking about, to manage the trend around those key levels. Don't forget the pitfall tool. If this video has been truly useful to you, okay, please let us know by giving us a thumbs up. If you dislike it, be sure to mark it down. If you think it's an essential tutorial that can help other Elliott wave traders, feel free to share it on the social media. Be sure to subscribe to our channel today. It is free. Our channel is 24 Elliott waves in plural. Digit 2, digit 4, Elliott waves in plural. Be sure to click on the notification bell, so anytime we record a new video, you will be the first person to be notified. Until the next time, enjoy yourself and be very happy. We are the TSTW24 traders talking about KinRoss Gold Stock Common Sense Elliott Wave Analysis. Thank you for watching, and I will speak to you soon. Happy trading to you all. Thank you, Brian, for putting me under pressure.